Rates are finally dropping. This could be the moment that you're waiting for. This video, we're going to cover what happened exactly last Friday to cause the rates to drop, and should you wait it out and wait for them to drop more, or should you get in the market now? These are hot questions that people are asking, and I'm going to answer your questions. Real facts, no BS. What happened last week? Let me show you. Jobs report. The jobs came in weaker than expected. Now, the thing I want you to really take away from this is mortgage rates like bad news. The worse the news, the economy's crashing, banks are closing. Back in COVID, that was super bad news. That caused rates to drop. The mortgage meltdown of 2008, that caused rates to drop. If the government needs to rescue us from something, that's bad news. So jobs being down many months in a row. Jobs were revised from the summer by 285,000 jobs, y'all. That's huge. That is huge. And so this bad news is what the bond market needed to have a little bit of bump. So just a quick tutorial. What am I talking about? Bonds and what is all this? So there's two markets, really, if you think about two camps, okay? There's the stock market, and then there's the bond market. That's where treasury bonds are. And treasury bonds are like a safe haven. That's where investors, big investors like insurance companies and hedge funds and, people, Warren Buffett's, okay? When they're investing millions of dollars and they're freaking out and they're worried, they say, "Oh, I'm going to sell my stocks over here and I'm going to go put a couple million over here in the bond market because I want a fixed return. I want my money to be fixed and sure of itself." The bond market is more safe than the stock market. The stock market is super volatile. So when bad news happens, like employment down, recession, bad words like that, the investors get skittish and they say, "I'm going to put my money over in the bonds." Okay, so that's how it works. So that's what happened last Friday. They did that, and the bond prices, when there's more demand, the bond prices go up and the yields or the interest rates go down. So the rates went down last Friday, the highest one-day drop that they've had in over a year, which was a glimmer of hope for homeowners, okay? Now, the rates are kind of up and down since then, but they've mostly kept some of those gains from last week. I'll answer some more questions in this video, but I wanted you to first understand employment. Employment has been cruising along. This is kind of a 2-year snapshot from August of 23 to now in 2025. And you can see these numbers to the far right are just dismal, okay? So it is almost guaranteed, there's a 100% chance that the Fed next week when they talk are going to lower interest rates. I do want to tell you, they're not lowering the mortgage interest rates. Mortgage rates and the federal funds rate that the Fed controls are like apples and oranges. They're different. The rates that you're seeing now already take into the account that the Fed's going to do what they're going to do. Now, there could be some surprises for us on Fed Day. If there's something that happens that's unexpected, it could be good unexpected or bad unexpected, that will cause rates to go either up or down. If things go along as intended and as anticipated, nothing's going to happen. Last year, I'm going to give you a prime example. Now, the red circle is last September, October. The Fed in September of last year, they lowered the federal funds rate by 0.5%. The mortgage rates, that's the red line, okay? This red line here going across the page from left to right, that is the federal funds rate. The blue line, you can see it kind of jaggy, is the mortgage rates. So in this period of time, you see the red line going down, and the blue line, the mortgage rates, was actually going up. So our mortgage rates actually reacted the opposite of what the Fed rates did. So I just want to give you that as an example. Is it the right time to buy a house? Maybe, maybe not. But if you're waiting for rates to go down and giving up on the house that you love, and you see the house that you love now, and you can negotiate a good price with a seller, it could be a good time. I want to show you another graph of prices of monthly mortgage payments and what this has done to mortgage payments. So home buying power for the rates going down, let's say 0.5%. And by the way, the rates have gone down in the last 45 days. Rates have come down like 0.7, 0.8%, just so you know, including what happened last week. You can see here a $380,000 loan on the far left. I've circled it in red, has a payment, principal and interest only, doesn't include taxes and insurance yet, is $2,465. That same payment with 0.5% lower, let's go to the middle column, is the same, and your loan is $20,000 higher. So for every 0.5%, you can afford with the same payment $20,000 more in price. Okay, these are some approximate numbers based on a $400,000 loan. If you haven't revisited in a while what your buying power is, I think that it is a good time. Okay, it's a good time to talk to your lender. It's a good time for you to get pre-approved. In fact, I'm going to show another slide here that you guys can take a picture of like, what should I do now to see if this is the right time for me? Okay. If you're a buyer, update your pre-approval. Call the lender that you've talked to before. If you haven't talked to a lender before, now is very well the time. I lend in almost all 50 states. I'm happy for you to contact me. My info's down below in the description. Would love to talk to you. Rerun your budget. You know, with prices changing, prices have actually come down a little bit in a lot of markets. I know here in Houston they're plateauing a little bit, and sellers are negotiating. Sellers are giving closing costs. Like, this is what we have needed to happen to help affordability for so very long. Once you get your pre-approval, start house hunting with a realtor and start looking for the house that you love. Now, if you're a seller, talk to your realtor. What are updated expectations? Whether you have your house listed or not, or if you've been thinking about listing. Like, y'all, I've heard and talked to lots of sellers that have fatigue. They're sick of waiting around, even though they're sitting on 2.5% because they bought during COVID. People's lives change. They've been putting themselves on hold, and they're like, okay, we're going to stick it out, but we don't want to live here anymore. It's too small. It's too big. It's too whatever. People want to move, and they're looking for this little bit of reprieve that is starting to happen. I believe there's some more lowering that's going to happen. I think that's going to happen in 2026. But I do want to caution you, y'all. 2026, from what I've heard from different economists, etc., is going to be a strong year. We've seen prices come down a little bit. We've seen inventory increase, which is healthy for the market. And we're also seeing rates trickle down. Lots of pent-up demand. So rates have been higher for over 3 years, a long time. This is the moment that everybody's been waiting for. I believe, now you never know, things could go back up, but I believe that this, things are going to kind of stay steady and kind of trickle down. But if you're getting back in the market, think of all the other people that are pent up waiting. So if we have a nice little drop in rates, there could be a flood into the market of people like, oh my gosh, this is the moment we've been waiting for. So the time could be now for you to make a move. If you find the house you love, if a seller is going to negotiate and give you some closing costs and give you the right price, now could be an amazing time, because later it could be the fact that prices won't be able to negotiate as much because all these buyers are in the market, and sellers are going to be like waving the cheerlead. They're going to be like pom-poms, like, we've got more buyers than we know what to do with. We're not going to lower our price. Now, when the rates go down, you can always refinance. And it might be good for you to wait. It may be better for you to wait. You might have to wait for rates to come down to have the payment that you want to have. But at least talk to somebody about it. Talk to a professional that can give you the numbers that have been revised and have been updated. I would love to hear your comments. Also, watch my first time buyer course that I've got free on YouTube. I will put it in the description. I'll see you on the next video. Bye.